A pleasant good day to everyone. At Farrell Associates Limited, we have decided to prepare this short video presentation to help our clients and the general public understand a bit more about property tax in Trinidad and Tobago. Over the next few months, this is what you can expect. All property owners are required to submit the valuation return form that was mailed on or before May 22nd. If the valuation division needs to visit your home, you will receive written notice from the Commissioner of Valuations at least 48 hours in advance. Once the assessment is complete, the Commissioner of Valuations will issue a notice of valuation to you that will indicate the capital value and the annual rental value of your property. If you disagree with these figures, you have 30 days to submit a written objection. Provided there are no objections, the Board of Inland Revenue will mail a notice of assessment that indicates the annual taxable value, the tax that you will have to pay, and the deadline for payment. You can also at this stage submit an objection. We will now review the valuation return form. The first section of the form is a request from the Commissioner for supporting documents. If you have any of these documents, you can submit a copy along with the return. If you do not have any of these documents, there is no need to acquire any of them at this stage. The first item on the return is premises. This refers to the address of the property. For example, number 23 Arepita Avenue, Port of Spain. In the case of vacant land, you can state the lot number, for example, lot number 80 St. Lucian Road, Diego Martin, or simply state parcel of land situated at St. Lucian Road in Diego Martin. The second item is the name of the owners. Here you can list all of the owners if there are several. If the owner has died, you can also indicate that here and give the names of the individuals who are currently occupying the property, or those who would have had an entitlement upon probation of the will or the administration of the estate of the deceased. The third item is the purpose used. Here you would indicate if the property is under residential, agricultural, commercial, or industrial use. If the property is under mixed use, you can say residential/commercial, for example. In the case of vacant land, under this section you will write vacant residential land or agricultural land as the case might be. Item 4 asked whether the property is rented, leased, or occupied by the owner. If you live in your house, you can write owner occupied. In that case, sections 4A and 4B do not apply to you, and you can simply write not applicable in those sections. Section 4A asks for the details if the property is being rented. If you rent part of your house, or if the property is an apartment building, you can list the number of units and the monthly rent payable. 4A Part 3 applies if there are rooms available in your property for rent that are currently vacant. Here you can, if you wish, indicate what rent you will charge for those rooms unfurnished. Section 4B applies if the property is leased. If that is the case, you can indicate what is the rent that is payable and who is responsible for taxes and insurance. If you are living on rented lands, you can indicate that in this section. Section 4C is asking the homeowner to estimate the rental value of their own property. If you do not know how much a property can rent for, we strongly suggest that you leave this section blank or write unknown or simply to be determined. Section 5 asks whether alterations to the building was done since the last return. Some of you would have filed a return in 2009. If you have made changes to the property since then, you can indicate that here. If you have never filed a return, as is the case with most homeowners, then you should write not applicable in this section. You are then required to sign and provide contact information. If there is anything else that you would like the Valuation Division to consider, such as land that is rented from the state or private individuals, land that is occupied by different households in different buildings, etc., you can write a separate letter and attach it to the return. Now we would have a look at some property tax calculations. The tax is calculated as a percentage of the annual rental value in accordance with the schedule in the Property Tax Act, which are shown here. For residential property, there are 4 classifications. Standard Residential 1 is a property that has 1 bathroom. Standard Residential 2 is a property that has 1 or 2 bathrooms. A modern house is where there is an ensuite bathroom in a bedroom as well as a specialty room. and executive properties are classed as those that have the same number or more bathrooms than there are bedrooms and specialty areas. The calculation of annual rental value of residential property also takes into account the location of the property, the quality of construction, and the condition. A simple example of the calculation of property tax for a residential house that has a monthly estimated rental of $3,500, the annual rental value will be $42,000. The annual taxable value is $42,000, subtract 10% for voids, giving $37,800. The annual property tax is then 3% of that, which works out to $1,134. For a commercial building that has an estimated monthly rental value of $10,000, the annual rental value is $120,000. The annual taxable value is this figure, subtract 10% for voids, giving $108,000, and therefore the annual property tax will be this multiplied by 5%, which is $5,400. For vacant land, the annual rental value is calculated based on the Valuation of Land Act. For residential property, the annual rental value is 3.5%. For property that has a capital value of $500,000, the annual rental value works out to be 3.5% of $500,000, which is $17,500. The property tax will therefore be 3% of this figure, which is $525. In the case of agricultural land, for property that has a capital value of $200,000, the annual rental value is 2% of this, which is $4,000. The annual property tax is therefore 1% of $4,000, which works out to be $40. In the case of industrial property, the annual taxable value is calculated as 6% of the installed cost of plant and machinery, as well as the building that houses that plant and machinery. In the case of vacant land, it is 5% of the capital value. Therefore, the tax works out to 6% of the annual taxable value if plant and machinery is housed in a building, 3% of the annual taxable value if it is not housed in a building, and 5% of the ATV in the case of vacant industrial land. If you require further information on property tax, you can contact the Government Property Tax Hotline at 612-9700 option 7. The website is www.finance.gov.tt/property-tax, at which you can download the valuation return form and get any other information on the system. The Property Tax Act and the Valuation of Land Act are available on these links. Thank you for listening. We hope this video has provided some much needed clarification. Please feel free to share with your friends and relatives. You can also check out our Facebook page and website for more useful information.